Hello and welcome again to FlexFX. Before we get into this video, I need you to understand something. This is a continuation of my previous video where I broke down the full demand and supply strategy step by step. If you haven't watched that video yet, you are going to miss key parts of the strategy and it will not make complete sense. So I highly recommend you pause this video right now and go watch my previous video with the title The Best Demand and Supply Strategy for Consistent Profit. I will be leaving the link in the description below. Once you've watched it, come back here and everything you see here will click much faster. And if you're serious about becoming a consistent trader using demand and supply, make sure you subscribe to FlexFX because in this channel, we are taking things to the next level. Okay, so let's begin now on the real chart, okay? The first thing we need to do is to go to the daily time frame, all right? To check out our daily bias, okay, to know what the bias of the day is so that we'll know if we're trading to the upside or we're trading to the downside. Like I told you earlier, we do not want to fight the market, okay? We don't want to fight the market. We want to trade in the direction of the market so that the probability of winning the trade, you understand, will be in our favor. So first thing I do is I go to the daily time frame, okay? Now, later in this video, I'll show you the easiest way for you to get your daily bias, okay? Even without doing your top-down analysis or checking record structures, okay? It's a very easy way. You have to watch, to a certain point of the video because I'm going to mention it, okay? So just stick around. Now, first thing we want to do is to look for the market. What is the market doing, all right? So far, I can see that we're having higher highs here, higher low, higher highs, higher low, higher high. And then the market broke structure, came here, gave a lower low, right? And then moved up again to give a higher high, okay? So it is still coming down again here. It came down here, gave a higher low, gave a lower high here, and then moved up here to give a higher low, all right? And then down here, we're having a lower low, okay? So this low is still lower than this low, okay? So now I will assume, because of what I've seen here, that we are in a downward trend, okay? Because we've been consistently creating lower lows here, okay? That means we're in a downward trend. I can also pick up my my tool here, my part 2 here to mark it out. So this is a lower low, lower high, lower low, lower high, and lower low, okay? So we may come up here and then go down here, okay? So the market for me is in a downward trend. Having established this, I know that on the 4-hour time frame, I should now be looking for, okay, an opportunity to go short. This is exactly what I'm looking for. So I'm looking for an opportunity to go short, okay? So I'll take this out now. All right, so let's go to the 4-hour time frame. Okay, so but before that, let me show you something I promised earlier that I'm going to show you in this video. How to actually know your bias, your daily bias, even if you cannot, determine if you're on a higher high or on a lower low, okay? The best way to know it is to set up a 50 SMA, all right? 50 SMA does the trick for you, all right? It's very easy. So with a 50 SMA, once you're trading below the 50 SMA, okay, you want to go short. You want to be looking for a setup that will take you down, which is, on a bearish trend, okay? If you're above the 50 SMA, you should be looking for trades to go long, all right? So right now, we are clearly below the 50 SMA. And as you can see, we are not anywhere near it. If you are around it here, just avoid the trade. If the market is just bouncing around the 50 SMA on the daily time frame, just avoid the trade, okay? Wait until you're clearly away from that 50 SMA and then, enter the market. So right now, we are clearly away from the 50 SMA. We are below it, so I'll be looking for shorts. If we're above it, say clearly above it, I'll be looking for longs, all right? So this is how another way I know my daily bias, okay? So let's go down to the 4-hour time frame, okay? I'll just get rid of the SMA now because we're done using it, okay? So on the 4-hour time frame, I'll be looking for my zone. All right, so let me play this and see how it goes, okay? Okay. Okay, good. I just got one now. So we're having a decisive candle, two decisive candles, all right, entering here, all right, entering this place, creating a zone. So this is what I've been trying to tell you about some decisive candles that are not big. Okay, now see this one is way bigger than this. This is more like an explosive candle. Okay, so these are the kind of candles I'm looking for. Now in a zone you can have a decisive candle, but it doesn't matter. What you're looking for is when the candle that left the zone. Okay, so the candle that left this zone, as far as I'm concerned, is a decisive candle. All right, so that makes this place a zone automatically for me. All right, I can now mark this place as my zone, placing my entry, okay, just touching the body the last week before the explosive move, okay, and then the top of my base will be at the top of the tallest wick here. All right, and then I just extend it down, waiting for the market to come back into this zone. All right, so let's see what happens. All right, so I'll play this again. Good. Now the market has gone down, okay, broke this structure here. So it has broken this structure here, so I'll mark that out again as a break of structure here. Okay, so because we've broken this structure here, this is now a value zone for me. All right, all I need to do is to now wait for the market to come back in. So if we go to our steps, you can see here that I've determined my bias. Okay, now the next step, I marked my zone. Okay, so here what we're having is a rally base drop. Okay, so, but sorry, what we're having here is a rally base drop. Okay, this is a rally and this is a base and this is a drop. If you remember what I said earlier, you should be looking for a bearish trend. You should be looking for a rally base drop, okay, or a drop base drop. Okay, so this is a rally base drop. Okay, so this is a zone, very value zone for that matter. This is my break of structure. So right now we're moving to the fourth step, which is the structure is clean. Yes, I've confirmed that. Is there the candle that is explosive? Yes. Cause the break of structure? Yes, I've marked that already. You know, bad zones, the market disturbed? No, it's not. Too many weeks? No. Already tested multiple times? No, the market has not been tested multiple times. Okay, so on the fourth, wait for price to return. So right now we'll wait for price to return, then don't chase candle. No, we're not chasing candle. Let price come back to the zone. Of course, definitely, this is called the return to origin. Okay, so we're just waiting now for the market to return, and then we proceed to step 5. Okay, so I'll just play this so that we can see what happens when the market returns. Okay, okay, so the market has tapped into our zone. All right, let's go down now to the 5-minute time frame and look for our entry. All right, so on the 5-minute time frame, we can see the market has tapped in. Okay, so what am I looking for here on the 5-minute time frame? We've had a touch. All right, I'm looking for a break of structure. Okay, if you can also go back to the step 5, the stage 5, we're looking for break of structure, strong rejection. Okay, and an engulfing candle. All right, so let's play again and let's see if we can get any of this. So as it tapped in, we have seen a rejection. This pullback is a strong rejection. All right, now let's see again. Let's see what we can get. All right, okay, so the market is now ranging, and then this here is a decisive candle. Okay, breaking structure. All right, so we're breaking the structure. For you to see that this is a proper break of structure here, you can go down to the 2-minute time frame and see that we ranged here. Okay, on the 2-minute time frame we ranged. So you can see we ranged here on the 2-minute time frame, broke out of the range. Okay, so once I see this, all I need to do is to enter at this breakout candle here. All right, place my stop loss just above this swing high here. Okay, and then aim for 2 to 1. Okay, let's see how it plays out. All right, I'll just play this. Okay, to make it faster, I'll move to 15 minutes time frame. Okay, to make it faster. All right, So remember, we're on the 2 to 1. All right, so let's play it. Let's see how it plays out. All right, and as you can see, we're almost heading to TP. We're moving back up and we're coming down, so TP smashed. Okay, so as you can see, TP has been smashed 2 to 1. All right, why did I enter this trade? Let me go back again to the 5-minute time frame. Okay, so you can understand why I entered the trade. So I saw all I need to see before I entered this trade. Okay, the first thing I saw was the strong rejection candle here. This is a rejection. Okay, the market tried again, but it couldn't enter. It pulled out again. We are finding it difficult to close within this zone. All right, the market tried again the third time, could not enter, and pulled out again, couldn't close inside the zone, but rather produced an engulfing candle, okay, which also broke structure. All right, for you to see the structural break very well, you can go down to the 2-minute time frame, and then you'll see how it ranged. Okay, so you can see on the 2-minute time frame, we can see some ranges here. Okay, so it ranged, broke structure, okay, and then gave us the entry. So at that break of structure, I automatically knew that it is time to enter the market. Okay, remember what I told you from the list I showed you earlier at number 5. You can check it out. At number 5, we had the break of structure, which is the things you must look out for. A break of structure. This is the break of structure. An engulfing candle. This one engulfed this candle. So this is an engulfing candle, and a rejection. This is a rejection. In fact, this is a strong rejection because we're having multiple rejection. The first one was rejected, the second one was rejected, the third one was rejected, and then immediately we had an engulfing candle that also broke structure. That is what you need. Once you see this, you can enter the trade for a 2 to 1. All right, although we have tapped into the zone, we've not entered the zone. However, I wouldn't want to risk it. Okay, so I just take this is my money here and move on. All right, I'll just take my money here and move on. I don't need, I look for another zone, to enter. Okay, so let's go back to the 4-hour time frame again. Okay, so on the 4-hour time frame, as you can see, this is a decisive candle. All right, now this is another zone here. This is another zone here. Okay, I like bringing it down again to the body of the highest candle in the zone, or the highest wick in the zone. So this is the body. This one is the decisive candle that pulled out of the zone. We still have another one again that exploded out of the zone, up to 3 different candles. Okay, this is a very good zone. However, it is not in the direction of our bias. Our bias says that we are what? We are bearish. So I wouldn't want to take this trade, but I might take this trade from experience. Why? Because if we enter this zone during the London Open, I might take this trade. Okay, because this is the only time I can guarantee that it may be profitable. Okay, now I'm going to get my 2 to 1. That is if I'm trading against the trend. I do not advise it for beginners. Okay, however, I'm speaking from experience. Okay, this is a very good zone. However, it is against the market. The only reason I'll trade this zone is if it enters during the London, market, during the London session. So let's look for an example of a bullish situation. The last one we did is a bearish situation. So let's look for an example of a bullish situation right here and see how we can enter the trade. Okay, so we're back here. First, let me look for a zone. All right, let's play and see if we can get this. This is a very good decisive candle. All right, so a decisive candle is a decisive candle. This is even a bigger decisive candle, and we're having a range. Okay, let's see if the range will still push up. Okay, still range. Oh, perfect. So this is good. This is great. So what we're having here is a rally-based rally. Okay, this is a perfect example of a rally-based rally, a bullish situation. This is a perfect example of a bullish situation. So here is our zone. All right, I'm just going to mark out the zone. Okay, this is a typical example of an early setup. Okay, you're seeing that it is clear and it is clean. We're having 2 decisive candle creating a base, and after that you're having another 2 decisive candle, pushing out of the base. Okay, this is a perfect entry. All right, okay, so now that we've seen our zone, let's go to the daily time frame and check for our bias. Okay, see what the market is saying. Okay, so from the get-go, I can see that we're already making higher highs. All right, this is higher Okay, so this candle didn't close below this. Instead, it made a higher high here. Okay, and then came down and also make a new higher high here. So I'm looking for buys. If I also take my SMA 50 SMA, okay, you can see on with my 50 SMA here, all right, that we are above the 50 SMA, so I am safe to trade, you know, for longs. Okay, so let me put that off. So I'll be heading to stage 3. So right here in my 4-hour time frame, I'll be waiting for price to come down into the zone. Okay, I just need to wait. So let's play this and see how it goes. Okay, price is going back up. Okay, we're creating structural liquidity. You can see price, all this you're seeing here is called structural liquidity. Okay, you subsequently in the video I'm going to teach, you know, all this, so ensure you subscribe. All right, how this helps to ensure that your zone is a perfect zone. Structural liquidity are very important. It is very important, you know, to ensure that your zone becomes a valid zone. Okay, because this liquidity here will end up being, you know, a fuel for the market to push back up, okay, from this zone. All right, so let's keep going. So the market is coming down. Good. So the market has tapped into our zone. Okay, market has tapped into our zone. All right, so what we do now is to go down to the 5-minute time frame. All right, so on the 5-minute time frame, we can see we've been tapped in. Okay, we've been tapped into the zone. So let's see how it plays out. All right, let me expand this a bit. Okay, so all right, okay, and then I love this zone, and I also love the timing of the tapping because it's just corresponding with the opening of the London session. So this could be a high probability trade. Okay, so let's go. Okay, so we see the market move up, come down again to take out this low. All right, let's keep going. Okay, that's an aggressive push. All right, that's an aggressive push. So let's keep going. We've not broken structure yet. Okay, we're still within the range. We'll push down again. Okay, that's the break of structure. Okay, now at this break of structure, I'm going in. So why am I going in? I've seen the aggressive candle, but we didn't break structure. We came back again. All right, pushed out and then broke structure here. Okay, at this break of structure here, I'm going in here. All right, putting my stop loss below this swing here. Okay, and then I'm aiming for 2 to 1 on the 5-minute time frame. All right, so I'm aiming for 1 to 2 risk to reward. Okay, let's see how this plays out. So the market is okay, so we're now moving. All right, okay, and TP has been hit. All right, so as you can see, we've hit TP. So it is that simple. Just know how to identify your zones. Okay, once the market comes to your zone, you go down to a 5-minute time frame. All right, once you're on the 5-minute time frame, all you're looking for are 3 things. You're looking for a breakout structure, you're looking for a strong rejection, and you're looking for an engulfing candle. Once you get these 3 criteria, sometimes liquidity sweep may not be necessary because we are only going for a 1 to 2 weeks to reward. Okay, so most times you don't need liquidity to get a 1 to 2 weeks to reward on a 5-minute time frame. That's the reason why I'm always choosing 5-minute time frame for my entry. Reason is because with a 5-minute time frame, you know, liquidity is not necessary for you to get a 1 to 2. All you need to do is just ensure that you are in the right zone. Okay, once you're in the right zone and you get a break of structure, a strong rejection, and an engulfing, you're in. All right, you're in, and you will surely get a 2 to 1. Okay, and it is even perfect when it happens during the London session. It is perfect. Okay, I hope you understand what I've been teaching so far. I'm sure if you don't get it right now, understand, you can practice this over and over again. Okay, and most importantly, a trader is not built in a day. It takes time. Okay, so you have to, it's a process. So I should keep practicing. I should keep watching these videos, understanding how these trades happen, and you journal. Okay, taking trades as well is very important. You will see that over time you become very consistent. All right, that's all for now. In the subsequent videos, I'll definitely be breaking these entries down into other ways you can enter the market, get higher rewards aside 2 to 1. But for this strategy that I'm teaching right now, I usually focus on 2 to 1 because most people don't even know a proper liquidity sweep. Okay, so but with this strategy and on the 5-minute time frame, okay, once you get the 3 confluences I gave you earlier, I mentioned earlier, on stage 5, you're good to go. At least you're sure of 1 to 1.5 risks to reward. Okay, so if you have any question, I'll be in the comment section replying all your comments. Okay, I'll see you in the next video. All right, stay safe.